Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is May 23rd, Tuesday, beginning of a new week here, or second day into a new week anyway. Today we are going to take a look at Nutrien Ltd Solutions. This is an agricultural company out of the material sector. Let's jump right in and take a look at them. About Nutrien's retail products and services, our network of over 2,000 retail locations in 7 countries provide a wide range of products and services to help growers around the world feed the future. We provide our customers with complete agricultural solutions, including nutrients, crop protection products, seed, service, and digital tools. So really everything around crops and how they are grown, right? Farmers, agricultural production is what this particular company is about. They are out of Canada, so there may be some implications around the Canadian taxes you would have to pay if you were to jump into this company. You can kind of see by this graphic that I downloaded from their homepage, and if you want to check them out on their homepage, www.nutrien.com. That is their homepage, www.nutrien.com. That is their homepage. You can kind of see here digital solutions, office, right? Application, so even the people up in the front office not necessarily doing any of the growing, application equipment fleet, fertilizer storage, crop protection products and seed storage, maintenance shop, products, services, and solutions for growers. They have 2,000 locations, as it said above, in 7 countries, and primarily in North America, Australia, and South America. So they have a large footprint, over 3,400 crop advisors and agronomists, I believe that's how you pronounce that. And they cover all crop inputs, right? Every resource you need, from seeds, nutrients, protection products, plus services and solutions. In the digital age, you can even see here a little picture of the phone. They probably have some apps that you can download and utilize the digital age that we are in. Again, this is a agricultural company out of the material sector. Now, the reason we are taking a look at them today, they were down 1.15%, closed the day out at $60.26. We are talking about Nutrien Ltd, ticker NTR, out of the material sector. 52-week range as low as $58.75, as high as $102.73. So at $60.26, they are definitely right up against their 52-week low here. Average volume of 2.4 million. Today's volume was 4. You can see started out all right, but overall a sell-off maybe a little bit after 10 a.m. They really started to sell off for some reason. Market cap of $30.436 billion, a beta of 0.87, so they are less volatile than the overall market. That's what beta means. It is the volatility of the market, 1 being the market, anything above 1 being more volatile, anything below 1 being less volatile. Price to earnings, PE ratio is $4.70 per share. This is extremely low. Earnings per share, EPS, is sitting at $12.83. This is extremely high. That is very nice to see. Earnings per share that's actually very, very high. Earnings date, August 2nd. The next one, forward dividend is $2.12 paid out on the year. They are a quarterly payer, so divide by 4. We will see that here in a little bit. Nice dividend yield at 3.48%. Ex-dividend date coming up June 29th. So if you were to buy them on the 28th or before June, you would get the next dividend. And according to Yahoo Finance, they have a 1-year target estimate of $79.13. So speaks to some potential upside appreciation in the stock price as well. Now you want to get into more than just the high level here. You want to get down into the statistics, want to get into the financials. One of the things I like to look at in statistics, go down to dividends and splits, and we're going to look at dividend yield theory. Dividend yield theory basically says if the 5-year average, right? We're going to look at the 5-year average here, or you could use 10-year average. In this case, we're going to use their 5-year average of 3.17% dividend yield. If the current dividend yield, 3.48, or what they call forward annual dividend yield, they're the same, 3.48, 3.48. If this forward dividend yield is higher than the 5-year average, it speaks to some undervaluation, right? These are inversely correlated. And if this number was lower than the 3.17, then it would speak to overvaluation, right? So currently, with a 3.48% dividend yield and a 5-year average of 3.17, this speaks to some potential undervaluation in this one right now. Payout ratio is very low at 15.35%. We'll see if we can back check that here on our next source. And as we saw, ex-dividend date July 14th, or I'm sorry, ex-dividend date June 29th, and the dividend payout date is going to be around July 14th. Now, another one under financials I like to look at, if you get into financials here under Yahoo Finance, I'm not affiliated, just one of the sites I like to go to, you'll find their balance sheet, you'll find their income statement, you'll also find free cash flow. Dividends are paid out of free cash flow, so you want to take a look and make sure that free cash flow is growing over time so that they can increase those dividends and you're not in jeopardy of the dividend being cut. or them eliminating it all together. So 2019, we went back to 1.7 billion in free cash flow, right? 2020 up 1. Almost flat, or actually not almost flat from 2019 to 2020. 2021 it started growing 1.7 billion to 2.1 billion, and then from 2021 a little over double to 2020 to 5.6 billion from 2.1. So it does overall 2019 to 2022 have growth over time, free cash flow growth over time. So that is good to see. They are repurchasing their own stock. That's also good to see. And again, all this information brought to you by Yahoo Finance. I'm not affiliated, and I always recommend more than one source. So another one that I like is stockanalysis.com. Not affiliated with them either, just another source that I like to go to. They present a lot of the same information, financials, just in a different manner, statistics, forecasts, which is what we're looking at here. And they have 21 stock analysts that have taken a look at this. They call it a consensus buy, though it is right there, a little sliver over the hold note, right? But a consensus buy overall there out of these 21 stock analysts. They have a low estimate of $49, and that would be a 18.69% decrease in the stock price. They have a high average estimate of $82.11. That would be a 36.26% increase in the stock price. And if it happened to hit their high here of $115, that would be a 90.84% increase in the stock price. All the while, if you bought them now, you would be collecting that 3+% dividend yield. Now, again, you can go in here and look under financials. You can look under statistics. If you were to go to this site, you'd be able to tell how many people thought this was a sell, how many thought it was a hold, a buy, a strong sell, or a strong buy. And you'd be able to break down this 21 stock analyst that way. I'm not able to do that because this is just a screenshot, right? But one of the other ones I like to go into under statistics is ROE, return on equity, and ROIC, return on invested capital. I like 10% or better for these. And as you can see, return on equity here, 26.5%, just blows the 10% that I look for away. That's very high. Return on invested capital, 25.8%. That's very high as well. So they are reinvesting their money back into the company, the money that they are investing very efficiently. That is very good to see. A lot of good numbers in this one. Everything so far looks very nice. And then you always want to look at their dividend history a little bit to see if they are continuing to pay out. It looks like their payout ratio, again, 15.38%, very low. Nice dividend growth of 5.91% here. Quarterly payer, currently pay out 53 cents per share. Went all the way back to 2020. You can see 45 cents in December 30th of 2020. 2021, March, they rose it up to 46 cents, carried it through 46 cents until March 30th of 2022, jumped it up to 48 cents. And then from 2022 to March 2023, wrote it to 53 cents. So I would, based on this history here, I would assume they would stay with this 53 cents until March 30th of 2024, which we will see the next increase there. That's just me guessing on that. But again, you can see 15% payout, very low. Dividend, nice dividend growth of 5.91. Numbers all around look very good on this one. I'm throwing it on my watch list. I probably like this right up against its 52-week low. If I was going to jump into this one here, it looks like a good entry point. All the metrics are really lining up nice for this one. I might actually look to start a position in this one. I want to do a little bit more of a deep dive into their revenue, into their debt, into their balance sheet a little bit more to see how they're growing over time, make sure they're paying down their debt and they have enough assets to cover all their liabilities, that sort of thing. But so far, surface level, at least what I look for to see if a company is worth doing more of a deep dive, this one checks all the boxes. Really like this one. Again, the only thing I would note on this one is it is a Canadian company, so there may be some tax implications on that where you have to pay some Canadian taxes, but you're going to pay taxes on your dividends unless you have it in a non-taxable account anyway. So just keep that in mind if you are interested in this particular stock. This is my investing criteria, right? Understand the business, growing free cash flow, growing dividend payout ratio of 75% or less, check valuation based on dividend yield theory, buy below current cost basis or within 15% of 52-week low, return on invested capital, return on equity equal to or greater than the industry average or 10% plus. And for financial companies, I throw in price to book. So that's my criteria. Make sure you're doing your own criteria, but this is kind of what I look for in stocks. That's why I break down this video the way I do. Again, checked all the boxes here on all this one. Even I looked at the price to book. I didn't show it here, but they were just above I think it was 1.16, 1.17 on price to book. So even that metric looked good on this one. So very good numbers all the way around for this particular company. Let me know what you think in the comment section down below. Is this one you have in your portfolio? Is it one you have your eye on? Is it one you've been adding to your portfolio? Again, all the numbers look good in my opinion. Well, that is it for this one. Trying to find value in the market, up and down the last couple of days. I think the market's still trying to figure out whether or not we're going to have issues with this debt ceiling. The government keeps going back and forth on whether we're going to pay our debt or they're going to continue to hold us hostage on this one. We will see. But as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community, trying to build a community of like-minded dividend growth investors so we can share stocks like this, share our experiences, share our concerns with stocks out there, and just share our investing journey together so that we can learn from each other, right? You can learn from somebody else's mistakes, and somebody might be looking at some stocks you've never even heard of. There are thousands of them out there. I don't have the time to review them all. So if you have some suggestions for future topics, go ahead and drop it down in the comment section as well, and I will try to work those into the Stock Pick of the Day series. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. Should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.